evening, all. Ira Epstein with your SPDR ETF wrap-up for this Tuesday, the 1st of March. Yes, 1st of March already, 2022. I'll tell you, it's going to be wild. Chicago will be in the 60s over the weekend and then right back into the 20s and 30s. You know, there's that, remember as a kid, March comes in like a lion, goes out like a lamb. Well, we will be that, unfortunately. Tonight we're going to get the State of the Union. I doubt that it's going to do anything to change the events going on in the Ukraine. You wake up in the morning, we'll see what that 40-mile-long caravan that Russia is about to use to circle Kiev, and what it's going to mean to that unfortunate city. You know, as I said, this reminds me of medieval times. I've said it a couple of times now. You go around the city, you starve it, you cut off electricity, you cut off water, you wear the people out, you demoralize them. Will they launch, though, so many missiles and so much artillery that they level the city? I don't know, but the pictures that we're seeing, and there's propaganda pictures, I know, they're terrible. And it looks to me like that's happening already, so we'll see what goes on. You know the events, you know that the Ukraine is asking for NATO membership. I doubt they're going to get it. NATO doesn't have a stomach to enter a possible nuclear war with Putin. But they do have a lot of resolve. They have a lot of money they're going to throw at this. But at the end of the day, if you can't shut off the air and you can't stop the ground troops, Ukraine is there for the taking. I didn't say the people are there for the taking. The cities are mobile. You don't take people. You might wear them down temporarily. They're going to fight you night and day forever. Lockheed Martin. Why not look at this? This came up with some of the people breaking it out. Embedded reading, weekly chart, by the way. So this chart is powerful. It got itself embedded week 1, 2, 3, March 1st. It's right now the embedded status, taking off to the upside. I teach you never to buy over an upper Bollinger Band, but the chart's actually been since back here, bullish as can be, and just keeps moving on up. Remember, on weekly charts, we don't look at overbought, oversold. Is momentum up, embedding, down, or embedding? That's it. Now we come to the daily chart, and in all fairness, this market just sat forever. That is what you call, remember what I teach you, that sideways churn action. And from that, you generally bring in the Bollinger Bands, you create a narrow sideways action, and you look for those patterns. Then the question is, which way does it break out? And this is a total breakout of that sideways action to the upside. The pattern isn't necessarily trending. It tried to do that back here, and then this one break took the market down. It was a head fake. Market came back, and from there, it just ran violently to the upside. If you look at moving averages, where did the market fight its battle? How many times do you, if you're a regular watcher, do I tell you that when you're over the 18-day average of closes, your bias is up, and markets on pullbacks like to fight at that to see what the next event's going to be. Is it going to be further decline, or is it going to be an up move? That's what happens. You'll see that in downtrends that rally back up for a while. They can fight their battle there as they try to revert the other way. It is something you learn to watch if you're a chartist. Now, how many weeks are we over the upper Bollinger Band, or days? Well, on a daily, you weren't there. Do you remember I said that sideways action? That's it. You look for those events. That doesn't mean, by the way, some people will take these, and what they'll do is they're going to buy a call and buy a put. Whichever way it goes, they want to be with it. Other traders that think it'll go nowhere, they'll put on strangles. They'll write puts, write calls, think they're going to collect the premium. I'd rather be the other side saying, okay, if it breaks out. We knew something in Ukraine was going on. The question is, none of these markets, this is only February 24th, 1 week ago. So I don't want to give you the impression, oh, that's weeks ago. The market didn't know. It had not made its move. The market started its move, and it's just been on a tear. It's gone from 396 already up to the 450 level. So, you know, you're looking at almost a 12, 13% gain in the market. Momentum, getting overbought, 3 days in a row over the upper band. So you're getting rich. Be careful there. In Apple, as I said, some problems, but Apple, let's applaud them. They're closing down their sales in Russia. So if you go to buy a phone, I just read this on the internet, you're going to see out of stock in Russia. This doesn't mean they're out of stock. They don't want to sell them. Apple Pay in certain areas, problems. They should just close the stores down. I didn't say permanently. Let this thing figure its way out. We need more American companies to make a stand. Obviously, you got to be careful because you're servicing your products there, and the general guy on the street is not your enemy. It's generally the governments that are the enemy. And I get what they're doing. So I'm not knocking it. It's such a hard line to walk. And regardless, you have an outside day to the downside today. If tomorrow, being Wednesday or Thursday, today's high is taken out, I look for an immediate pop to the 18-day average. Barring that, if the market can just hang here between here and the lower Bollinger Band, I'm looking for prices to decline a bit more. On XLF, the financial sector, did you see what happened on interest rates? Your 10-year note in a 2-week period has gone from 2% plus to 1.73 this morning when I was watching it. That's a quarter-point move. You don't get these kind of moves. This is unusual as can be. It certainly, on one hand, gives the Fed room to raise interest rates. On the other hand, why is it falling back this much? Because there's great fear about what all these wars and all these events are going to mean for the U.S. economy. I'm not bright enough to see through it, but the 400 on-staff accountants and economists and so on at the Fed are. We'll see what goes on with all that. The trend is down. The banks are having trouble, as you know, passing on these rates and getting people to give them money at one rate and lend it out at another. That's difficult. Disney under pressure. If you're watching the price of distillates, they've run away. Everything in energy's run away. So it's going to create a bit of a problem. People will go, well, everything's got to be more money. The price of labor, how are people going to get to the theme parks? I realize that's not their whole business, and you know that. Streaming and so on. Streaming comes down a little. Spring is coming. People don't stay in as much. So they're feeling some pressure. To negate the current downtrend, you have to get back over 150.28. Until that occurs, I think the pros are selling it short, seeing if they can drive it back into that 140 zone. In XLI, the battleground's right here. I think the pros have been selling. I know what I've been telling my subscribers. You know, look at it. And nice decline today. And I've been telling them, I think the pros are going to sell in right here. Stops over that number to see if they can drive the market back down. Take out today's high. I wouldn't want to be short anymore. But you haven't taken out today's high, so until that happens, something to look at. Same in semiconductors. This market's a short sale, I think, as a chartist. Doesn't mean you have to do it. I'm wrong in my thinking. If you take out the highs of Monday, and that number's 208.65, and barring that, I'm looking for down here, but I'm not looking for a run to the downside. Back and forth with the downside bias. Home builders, can you imagine what these poor guys are going through? Name me a product that's going to be cheaper. First off, it is time for the Biden administration to take off the damn tariffs with China. They're not going to meet the Trump goals to begin with. Bring in the products, get us prices down. Look at our neighbor Canada. I'm talking about homes. Enough with this lumber nonsense. Bring the lumber in. Get the oil going. You got to think bigger rather than smaller at some point. The Biden administration is not going to get China to live up to the deal that was made under President Trump. Trump couldn't do it. Biden's not going to do it. If the market can get over the 18-day average, my eyes will open up and I'll get excited. All right? And it is the season where people are going to buy homes. Believe me, the supply is small, the buyers are large. Especially now that interest rates aren't going up. You know, that changes the game a little. On the energy sector, whipsaw for the XLE. I don't know how to trade something like that. I know how to work with energy, but not that. When I look at the gold market, higher highs, lower lows, overbought. I'll let somebody else own GLD. Doesn't look that pretty to me. GDX, same thing. Lower low, higher high. I believe in trends. And I want you to throw the name off of a chart. When I teach in my full charting course, you know what I do in it? I pull the name of the charts off. Do you know why? Because you're going to have a preconceived idea. It's natural to do it. But if you look at the pattern and you're looking for a trend, it isn't there. You're going to tell me it's there because of Ukraine today. I know that. You know that. Copper, same thing. I'm bullish copper for the reasons I've laid out to you, that this war event will end. COVID is basically over for the time being in America, Europe, and other areas. It's still rampant, we know, in Hong Kong, South America. There's different areas where it is not conquered yet, but that's going to be bullish, this market. Copper's at a new high. It was my favorite trade. I'm going to be tomorrow on Sky Business in Australia at about 4:45 p.m. Central Time. And I know that they'll ask me again. They never tell me, but what are my favorite trades? I told them XME and COPX, COPX. Those were my favorites. And that was back in December. I said, I'm friendly as can be this year in those markets. TLT, right up to the resistance point. So what do I teach? First time you hit an upper Bollinger Band or a lower one, professional money comes out of the market. You're not embedded. I think they're taking their money off the table. UUP, the dollar, bullish, higher lows, higher highs. But do I ever tell you to go long over an upper Bollinger Band? Not going to happen. And last, I wouldn't tell you to go short in the euro, the flip-flop of all that. So when you put this all together, you're looking to see which way do you go, and that's where I come in the mornings with you on your ETFs and tell you about it. At 9 in the morning, I start recording my ETFs. I wait until the government reports that typically are done by 9 in the morning. I want them out of the way, the initial algorithm trade off them. Then we start looking at the stance. I am not what you would call a day trader. I'm certainly a swing trader. And there is a difference between that, and it has nothing to do about sexual preference. It is purely about the market doing one of these type of moves over and there. It doesn't have to happen in the day. I don't have to have my traders go home at nighttime with no positions, and that's what a day trader does. They carry nothing until the session starts again. You're going to find that I cover all these markets for you, every which way in futures and in the ETFs. So many of the ETFs are made up of the futures markets, you know that. You have nothing to lose. Go to our website. It's under the word research, www.iraepstein.com. And at that point, you judge for yourself. Hey, should I give that thing a try? I think you'll find you should. I'm Ira. You have a good day, and I'll see you all tomorrow.